Right? Everybody had coffee? Let me hear it. Come on, guys. Okay, that's good enough. That's good enough for now. Let's keep things moving. Our next guests are Elizabeth Beezer Clarkson from Sapphire Ventures, John Doran from TCV, Fabrice Grinda from FJ Labs, and our moderator, Connie Loizos.
Hello again, everyone. So as we've been talking about at great length today, this has been a very weird 6 months between Brexit and the US electing a new president who not so long ago was better known as a D-list reality TV star. We're going to be talking with this very diverse panel of investors today about how the sort of shifting and uncertain political landscape changes their work a little bit. And then we're going to skip, we're speculating, and then we're going to dive right into some of the trends they're seeing and maybe what you're predicting for 2017. Fabrice, I thought we could start with you. You have a very unusual background. I'm sure some of you here know who he is. But Fabrice has co-founded a number of companies, including the classified site OLX, the used car marketplace BP. You've invested in dozens of companies. You're French, but you live in New York, where you've moved decades ago. So what do you think? You're outside of the Silicon Valley bubble. What do you think of the US presidency?
To be honest, it's really hard to tell what the impact is going to be on the U.S. and for us as entrepreneurs. I mean, the reality is it's not as though they came out and with a set of policies that was clearly articulated and well thought through that we can actually really react to. There's been off-the-cuff comments. You can have some perception of ideas, but frankly, I think it's unclear. We just have to wait and see, and we can be optimistic that there will be maybe less deregulation, even though we can be worried about the immigration stance, especially when it comes to finding tech workers. But at this point, I think it's just wait and see. I think we dislike uncertainty, and I think that uncertainty is creating an element of fear in investors in general, but for the most part, frankly, it's outside of our realm. It's not as though it impacts us on a day-to-day basis. We keep investing. There's still many great entrepreneurs out there, many great ideas, and we keep doing what we do.
Right. Well, so Beezer, and I completely agree with you. We only know what we know, but I'm just wondering, are you having talks at your firm? Beezer manages, she's an LP, she runs a fund of funds which owns stakes in other venture firms around the world. I mean, are you talking about, sort of this rhetoric about limiting free trade, keeping manufacturing jobs there, basically slowing down tech?
There's certainly some discussion because it's in the news and it's prevalent and it's worthy of discussion, but much like what Fabrice was saying, it's so hard to know what will happen that it's speculation at this point. And from an LP perspective, what you're doing is investing in other investors. And the goal is to pick people who are capable of managing through ups and downs. And if you look at the venture history, administrations do come and go every 4 to 8 years, and the tech ecosystem keeps moving forward. So there's some optimism that will continue.
Right. Well, actually, that's a great point. And John, maybe we can talk briefly about this. TCV is a global investor. I think it's invested something like $700 million in Europe in recent years, but of course it invests much more in the US. To your point, Brexit's much more sort of permanent than Donald Trump, possibly, hopefully. Are you spending more time talking about what's happening in the US or Brexit, or what's sort of like the bigger...
Yeah, we've actually invested almost $1 billion since 2011, since we opened
in Europe.
In European companies.
Oh, wow.
Yeah. I think the Trump thing and the Brexit thing, I'm kind of similar to place to Fabrice. I think it's too early to tell. The one thing I think, I don't even think politicians themselves know what's going to happen with Brexit in this country. So for us as investors, I think it would be even harder. The one thing I do hear from our CEOs and entrepreneurs that we partner with is that they do express some concerns about the ability to attract talent, especially tech talent across Europe. And I think that's something that's been a real advantage for companies in Europe over the last 10, 15 years. And so I don't think that will change. I hope it won't change. But that's one of the kind of concerns that most of the CEOs that we've talked to post-Brexit have voiced.
Yeah, and we've heard a lot about that today. I think people are starting to sense less movement, especially for very sort of nascent founders not wanting to come here necessarily, versus founders who might scale their businesses who are already here. John, let's stick with you for a minute. Another thing about TCV is it's known for late-stage investing, also doing some crossover investing in public companies that are seen as sort of valuable. And these sort of tourist investors, mutual funds, hedge funds, they seem to kind of hit the pause button in 2016. What's going to happen in 2017?
Yeah, it's a good question. I think we definitely saw an influx of, I mean, I wouldn't classify them as tourist investors, I've seen that phrase, but of non-traditional technology investors doing the kind of rounds that we would typically do, especially in 2014 and 15. I think 16 we've seen a pullback from that. I think part of it, in my view, is a less buoyant market from fundraising perspective. I think the other part of it is you've seen some of these investors who have potentially been less diligent about the work, or less, or easier on terms, or more willing to meet what I would classify as potentially heightened valuations in that period. And some of those people have been burned. So I think 2016 definitely saw some pullback. At the same time, I think there's been a ton of capital raised across the spectrum, whether it be early stage growth like us, or even in that category. And if you look at the alternatives they might have, I'm not sure it's any better than what they're seeing in tech from a return perspective. So I wouldn't be surprised if you see an uptick or additional investment from those pools of capital in 2017 and beyond.
Fabrice, do you have any thoughts about that? I mean, you have a lot of early stage bets, but you've been doing this for a long time. Some of these companies are coming in and marking up your deals.
Well, we still remain in, if you look at the macro perspective, we're still in a very low interest rate environment where people are yield chasing. There are not many places in the world today where you can get return, and technology is actually the main provider of productivity growth and the main provider of economic growth globally today. And so even though the fair weather investors maybe took a step back for a variety of reasons in 2016, I suspect that the frothiness and the desire to invest in this category will continue for the foreseeable future. And we've seen people focusing more on unit economics and more on underlying or make sure the business is viable rather than growth at all costs, which I think actually is a good thing. And it's good for the environment, and it's good for the startups. But will the capital completely retrench? No, absolutely not. I'm profoundly optimistic about 2017 and what's in store for us.
Great. What about corporate VCs? You know a little bit about this. You have your single LP is SAP, the software giant. To be honest, I've sort of lost track of 2016. I haven't seen a lot of numbers, but I know that in 2015, we hit like a high peak. Corporate VCs accounted for something like, in the US, 13% of all the money invested in startups, and they were in 21% of the deals. These things tend to sort of operate in cycles. Do you see, more corporate VCs coming in, or
well, it's
a pullback?
interesting. We study the market in general, and as part of that, we look at the investing activity in different sections, so corporate as well as traditional venture. And over the last few years, the makeup of the significant of the volume of the corporate investors is the same cast of characters. It's Google Ventures, it's Intel Capital, it's Salesforce, it's Cisco. So they've been pretty consistent players. And they can switch, at least some folks like Salesforce can switch between investing and M&A, and you've seen some of that in 2016. So I suspect the absolute numbers are down. But you have Google Ventures doing hundreds of millions of dollars a year. Same thing with Intel. So that's really been the backbone.
Right.
When you think of it. And then other folks that come in are much smaller dollars and smaller volume. No one else has that kind of platform.
Right. Well, it's just amazing the variety that we're seeing. I mean, even Campbell's, the U.S. soup company, has a venture fund at this point. I am wondering if the IPO market isn't sort of as vibrant as people are hoping, or the M&A market isn't as vibrant. Do you think corporates have to feel sort of more pressure than traditional VCs to maybe get rid of their non-strategic investments? I mean, how long can they hold on to them?
I'm going to speculate here, not having that same situation in our own shop. given our independence. But I would suspect most of the investments, I mean, Google Ventures, I don't think has to sell to make
Right,
their
those,
returns.
right. Like, to take the top 5 out of it that are gazillionaires.
Well, I'd presume that people that are coming into it, some of the large corporates that are coming into it, are coming into it because they're looking at the digitization of the world and wanting to engage with it. So it could very well be they're actually investing for their own purposes, and they're investing in companies where they can use the technologies. So they might not have to feel any pressure to exit. We certainly haven't had any conversations with, we were not obviously invested in any of them, but we haven't heard any discussions around that. So I don't know if someone else has had a different experience, but I would suspect a lot of these folks are investing so they can understand what's happening in the technology world and be closer to it.
Right.
Because it is such a powerful force, and if they don't, their businesses could have a lot of challenge to them.
Right,
Right.
absolutely. Right, given how fast everything's changing. Fabrice, let's just maybe talk a minute about the IPO market. You said you're feeling very optimistic. So you think we're going to see, I mean, what reason do you have to think that 2017 will be better than 2016?
I'm feeling optimistic. My optimism is actually more profound than that. It's more like we're still at the very beginning of the digitalization of the world, if you think about it. Like, you have entire spans of the economy, from education to healthcare to public services, that have not yet been touched by the digital revolution. So we're seeing that transformation and attacks by startups, vertical by vertical. Now, specifically with regards to the IPO market, I'm less optimistic about that opening up, in the sense that the cost of going public, and I mean both the explicit cost of like getting ready, and the implicit cost of like being ready for public scrutiny, doing SOX compliance, Section 404, et cetera, have increased dramatically, to the point that people are delaying IPOs as long as they can. Microsoft went public at like a couple $100 million in market cap, and Apple at $1 billion. Now you're seeing Facebook at $100 billion, or Alibaba at $200 billion. And it, frankly, when I was younger, my dream was to be a public market CEO, tech entrepreneur, when I was like 15, because I'm weird that way. And today, that would never be my dream. I mean, that feels like a nightmare, where you're only dealing with like investors who care about the quarter-to-quarter numbers. You have a whole bunch of like regulatory and legal risks that and your entire strategy would be out there. And so the IPO market per se, no, but do I think the M&A market is going to be frothy if the economy keeps doing well and interest rates remain low? Absolutely. Because digitization is continuing, and many of these companies, you know, from GM to others in every other category, hasn't yet transformed itself. They need, and they're hungry for technology companies to help them and come to the 21st century. And so I'm way more optimistic, let's say, by the M&A market than I am by the IPO market, until it becomes more deregulated and the costs of being public actually decrease and you start getting liquidity.
Yeah, I think we've maybe even seen more non-traditional companies acquiring tech companies this year. John, do you agree? I mean, I've always sort of wondered if VCs default too much to the excuse that it's SAR box and it's too expensive. Yep. Do you agree with that? And also, I guess with Trump and this sort of mantra of less regulation, do you think that could have an impact on the IPO market?
Yeah, it's a tough question. I mean, I do think there's probably other reasons why there's been less IPOs. Mm-hmm. I think the elephant in the room is that you have a very, very buoyant private funding market, lots of capital, lots of dry powder. And so sometimes the valuations you're seeing in the private markets, especially over the last 18 months, I do think there's been some correction in that, are multiples that are higher than the public markets, which I think in the last 20 years is pretty surprising, right, to most people. So you have easy access to capital, so why go through the pain of being public and having to report and being transparent and all those things. The second thing I think is also somewhat of a negative is in the last 2 to 3 years, you've seen a lot of these companies raise at very high valuations. And so going public might mean a down round, right? And so much harder.
In fact, it has.
Yeah, exactly. So that's much harder to do, I think, in the public eye than doing a down round with another private investor. Or if your business is in the positive case doing well, why not continue to grow for a couple more quarters, a couple more years, such that when you do get a chance to go public, it isn't so obvious that it's necessarily overvalued 2 years ago or 12 months ago. At the same time, I do think there probably is some of these challenges. I agree with Fabrice. I'm not sure that, I think it's a certain constitution it takes to be a public company CEO. And so there's definitely rules and regulations that have gotten stricter over the last 15, 20 years. On the flip side, I do think you're seeing a movement, especially in this country, to make it easier to go public. But I'm not sure those things have been kind of solidified yet.
So that's, yeah, I should maybe mention that John is based here in London. He's Irish, but he's lived here for quite some time. Can you sort of, do you think the sort of European public markets are healthier in comparison, or is that a crazy question?
Yeah, I'm not sure they're healthier. I mean, you do hear all the time, oh, European tech is undervalued relative to the US. I personally don't see that. I think if you look at the multiples for like in the public sphere, they're pretty similar. In the private markets, we've heard, I think other people have said today possibly that there's lack of capital in Europe or relative to the US, or there's more opportunity here. I would just simply point to returns. I don't think you're seeing outperformance in European investments relative to the US, and you would see that if the valuations were that much lower here.
Right.
So our view is that it's pretty similar compared to the US. I would also say before we opened our office in 2012, we did do a study where we looked at the dollar opportunity relative to capital raised, and there's absolutely less capital here, but there's also less opportunity relative to the US.
Sort of
We think there's a lot of
sense.
opportunity, which is why we're here, why we opened an office, and we're very bullish on Europe. But
Right.
the US is a much bigger market, right? So to compare the number of, say, unicorns or words I don't like that in the US to here, I think is not really fair.
Right, great point. I did also want to ask, I think there's sort of like this excitement about 2017 because of a few IPO possibilities specifically, including Snapchat, Airbnb, and who knows, maybe Uber if their investors get lucky. What happens if those are disappointments? I mean, I guess how people always sort of attach too much importance to these very anomalous companies. But Beezer, what do you think? I mean, is that sort of...
Well, at a high level, a healthy exit environment, be it IPO or M&A, is really critical to the venture ecosystem. So we are always optimistic and hopeful that there will be healthy exits, be it, if all these IPOs happen. And the question for are they successful somewhat depends on when you came in as an investor, right? Because to the point about some of the down rounds that have happened in recent IPOs, if you came in early, that could still be quite a high exit. But if you came in later and you were close to a pre-IPO round, it might not be as successful. So sort of where you stand, where you sit type situation.
So much.
Right.
to
But it would,
some degree.
I think it would dampen the general ecosystem's feelings, right? People want to see successful IPOs and feel that there is this path to profitability. Employees would like it. I mean, it does open up a lot of important things from that side.
And I do think there's some nervousness on the part of founders. I had wanted to talk to you, Fabrice. The early stage venture firm First Round Capital published a study last week that some of you may have read. They talked to 700 founders that are part of their portfolio and sort of operate outside of First Round. And 67% of the respondents said that they sort of felt this power shift away from themselves and toward VCs, which I thought was very interesting, especially because VCs have raised a lot of money this year. There's still a lot of money coming in to the US, especially from outside of the US, including China. What do you think is happening, and is it a good thing?
Well, look, the power between VCs and entrepreneurs ebbs and flows, typically depending on how much they need capital versus how much capital is available. And there was clearly a period in 2015 where there was extraordinary frothiness and capital was available at every stage, and maybe extra capital from not all sources of very smart money. And so power really went in the way or in the direction of the entrepreneurs. And frankly, not always to their favor, because if you raise too big a round too early at too high a price, and you ultimately don't grow into that valuation, you then face down rounds and actually a number of conflicts. I see the ebb has gone into the other direction right now, but probably in a reasonably healthy way. As companies are now, the valuations are still high, way higher than they were 5 years ago or 6 years ago, just maybe less crazy than they were 12 months ago. And so more realistic growth expectations and more realistic terms. But no, I think we're at a reasonably fair balance right now between getting the right terms. I mean, no one's getting like 3x participating preferred terms. It's like a 1x liquidation preference. I mean, very clean rounds. And so, yeah, the power has gone a little bit in the other direction, but I don't see it as a power dynamic. The reality is when you're selecting an investor, you're getting married with them.
Right.
They're going to be with you for many, many years. They're on your board in the good times and the bad times. And so you need to pick on, frankly, that and that dynamic much more than price.
And I sort of think because of the transparency that we have now into the system, there'll never be like a huge imbalance again. You know, VCs can never get away with what they got away with in the past, I don't think. Okay, we have like seconds left. One last sort of corny question. VC has changed a lot in the years that I've covered it, but there's always room for change. I just wondered if there's something that you'd like to see change in the ecosystem.
I would continue to encourage people that are investors to think about their point of differentiation, right? The entrepreneur is differentiating in their company, and that needs to be met with a differentiation on the investor side so they know, to Fabrice's point, what they're going to get from their investor
Right.
and what makes it different and what makes it valuable. So.
Right. Make your life easier.
Yeah.
John, what do you think?
Yeah, I think we've talked a lot about, for example, the IPO market and kind of unwillingness for founders and VCs to IPO their companies. I mean, one stat that I saw recently was that 90+% of exits, VC exits in 2016 was M&A, right? And I would love to see 2017, 18, where that balance moves towards more public companies, because I think it's only healthy for the long run that you see independent champion businesses where they've had venture investing and venture investment and kind of proven themselves in the public market, which I think is the ultimate place to prove yourself.
Great. And Fabrice?
A little bit of a non sequitur of an answer, but I think it's maybe a comment on the nature of entrepreneurship. The reality is we define entrepreneurs as people who want to go and build companies that are like unicorns and multi-billion-dollar companies. But the reality is, I think entrepreneurship in its own right, meaning being your own boss and building something, is extraordinary, even if it's not a billion-dollar company. If you want to build a local mom-and-pop store or a restaurant, and in fact, many of our exits have not been to unicorns. We've averaged, I think, 5.7x on realized returns, but often we'd invest at like 5 million and we saw 30. And no, these are not necessarily VC investable companies, but they're amazing companies with amazing entrepreneurs and it's great to allow them to fulfill their dreams. And so I think I'd like to see entrepreneurship as a whole, as a category, being promoted, because it's an extraordinary way of living. It gives you freedom and independence of thought and creativity that you can't have in traditional jobs, and not just limited to, Uber, Facebook,
Right.
you know, and a billion-dollar outcome.
Yeah, obsess less about the unicorns. I
Yep.
completely agree. Guys, thank you so much. We really appreciate you all coming here today.
Thank you.
Thank you.
And thank you all.